All right, so in this episode, I'm going to be teaching you basic market structure and how to identify a uptrend, also known as a bullish trend. So let's go into the charts. So a bullish trend is identified because price and the way it's moving, it's creating higher highs and higher lows. So when price rallies up and breaks a previous high, it's going to be known as a higher high because this high is greater than this high. And while on the rally upwards, it broke the structure. So BOS is a break of structure. So once that previous high has been broken, that creates a higher high. Once a higher high has been created, we can expect a retracement, or also known as a pullback, to any level in between this higher high and this previous higher low. Once price reaches an area of interest where buyers, investors, or banks are looking to buy, they will place all their orders and drive the price upwards. Once the structure has been broken to the upside, so once a break of structure has been created, so as you can see, price drove up here, breaking this previous higher high, creating a new higher high. That is a break of structure, so we can at any moment, nobody knows when it'll happen, but eventually we will get something known as the retracement or the pullback to create a higher low. So a higher low, the key things that you want to know about a higher low is a higher low is not created or is not validated. This is the most important thing. A higher low is not validated until a higher high has been created. Okay. So in this example, price came up, created a high, came down, created a higher low. And the reason why we know it's a higher low is because price drove upwards, broke this structure, creating a higher high. Therefore, this is now a valid higher low. So when price breaks this higher high through break of structure, this becomes the new higher high, and then this becomes a valid higher low because this break of structure occurred. So once price, after its retracement to its pullback, once it retraces, as soon as it starts rallying up and breaks this previous higher high and creates a new higher high, now this is a valid higher low. So in this instance, price retraced, and it seems like we're going to the upside. Really quick, answer down below: is this a valid higher low? So if you answered yes, you're wrong. And the reason why is because price has not broken this previous higher high. So when price breaks this previous higher high, now you have a valid higher low. And the reason why it's like that is because price can do any of this. It can do anything like this. Just because all this is created doesn't validate it as a higher low. This is just market structure. And the best way that can help you identify higher highs and higher lows is if you mark up, once it creates a higher high, you can use two lines. So you just get your lines, and then you draw your higher high, and then you draw your higher low. So you're going to have your break of structure. Your new higher high has been created. So remember, the higher high is created after the break of structure. So we have our higher high. You draw a line at your higher high, and then you draw your line at your previous higher low. Anything that's in between this level is nothing. It's just market structure. Anything that's in here is nothing. It's just market structure. It can do whatever it wants. A higher low is only valid until the higher high, the previous higher high, is broken. So what we're looking for is price to break that level, creating the break of structure. So right here we'll have a break of structure. Once this break of structure is created, now you'll have a valid higher low. So your valid higher low will technically be right there. And the reason why it's right there is because that is the last elbow. So each one of these turns here is known as an elbow. That is the last elbow that pushed the price up and broke the previous higher high. So this would be your higher low. So hopefully, so now here, actually, let me show you some examples on a real chart, so that way you can get an idea of what it looks like. And because it doesn't always look beautiful just like that example. So as you can see here, price is making higher highs and higher lows. So that's how we know we're in an uptrend, because price rallied up. This was the highest point that it rallied up to. This is our small retracement. And remember, so this is the higher high. So this is our higher high. And then this is going to be our higher low. So that's our higher high. This is a higher low. So price broke this previous higher high. So this is now a higher high. And remember, as long as we don't break below this, then we're good. So we draw our two lines. And we ask ourselves, did price break this level? Did it create a break of structure and create a new higher high? Yes, it did. Price came down, did a small retracement to this around this level here, broke the structure and created a new higher high. So now this is a new higher high, and this is the higher low. This is the last elbow that it created before it went to the upside, right here in this level. So this is the higher low. So then what did price do? Price came down just a little bit, came back up, broke this previous higher high. So now this is a valid higher low. Now this is a new higher high right here. Price came back down, tested it around this level, and then came back up, broke this previous higher high, creating a new higher high. So now this is a valid higher low, right? Hopefully that helps. The trend, you know that the trend has changed from bullish to bearish if a valid higher low has been completely broken. And so it'll look like this. If this price were to happen to come all the way down here and close below the body of the candles of the higher low, then this trend has flipped from bullish to bearish. Okay. So in this example, you're going to see here that this is exactly what happens here. So we have our higher highs and higher lows, higher high, higher low, creating higher highs, higher lows, create a new higher high. And then you're going to see, okay, price came all the way down here and it broke the structure to the downside. It broke this previous higher low, which now changes the trend from bullish to bearish. So now what we will be expecting is we'll be expecting lower lows and lower highs to the downside. And that will be episode 2 of the market structure basics. So make sure you guys like, comment, and subscribe, and be on the lookout for episode 2 on how to identify a downtrend.